AIM-listed Ncondezi Energy is a Mozambican power development company. It owns a thermal coal resource located in the Tete province, which is expected to supply a coal-fired power plant in the region. Hanno Pengilly is the Chief Corporate Development Officer at the company. Hanno, welcome. Before we get to the why, explain a little bit of the history and how we got to where we are today.
Sure. So Ncondezi started life as a coal exploration company, looking at developing a coal mine in northern Mozambique, province of Tete, as you mentioned earlier. And as we developed a 4.1 billion ton coal resource, it became clear that there was a gap in the power supply market, given that we are located in one of the main generation and distribution hubs of southern Africa. And we were able to take advantage of that gap, and we are now sitting on a 300 megawatt coal-fired power plant with integrated coal mine, supplying that power into the Mozambican grid, where it can be distributed across the southern African region.
I said you're AIM listed. I want to talk a little bit about Mozambique. Why Mozambique? Why Ncondezi? And why coal specifically?
Okay, so let me break those down into those three pieces. I think very simply, Mozambique is the right place to be doing power at the moment. It's the leading exporter of power in the region. It currently exports power. It's the largest exporter of power into South Africa, the largest consumer, and it also supplies power into Zambia, Zimbabwe, Botswana, and Namibia, and is about to actually be connected to Malawi as well. It's also the only country that's actually successfully delivered large-scale independent power producers in the region, which is why it's an exporter. So you're talking about a country that has the track record of actually delivering projects of this nature, and it's expected to play a larger role going forward in supplying that power both to itself as well as the region. With respect to why Ncondezi, I think it's very important to highlight that we have probably what I would say is one of the most experienced boards in the power development space on AIM. And this is also reflected, or this expertise and access to resources is reflected in the fact that we have advanced all feasibility studies both on the power plant and the mine. The environmental licenses are in place for both, again, the power plant and the mine, and most of the permitting and planning is already in place. As a result of where we are in the project, we now have two leading power developers and operators in General Electric and China Machinery Engineering Corporation, who in November submitted a non-binding offer to acquire 60% of the overall project, both the power plant and the mine, where they will be looking to not only finance the project, but also operate that project. So again, we're a highly advanced project, leading partners developing it, and most recently, actually, I think earlier this week, we received support documentation from both government as well as the state power utility that will be buying the electricity off of the power plant for 25 years, endorsing the project, its partners, and basically confirming the roadmap to de-risking the project to final construction decision and operation. And really, at the moment, we are at a critical de-risking path where over the next 6 months, we will be agreeing a project timetable, finalizing the transaction with our partners, as well as firming up all the numbers on the project to get a confirmed tariff from government, which is really sort of the kickstarter for the final agreements. Now, we're expecting to have guidelines on when all of these pieces are to come together. Now we're finalizing the timetable with our partners, with government, now that we've received those documents. And really, I think inside the first half of next year, we would expect to have all of those major de-risking milestones complete, if not during the first quarter of next year. So very much a very exciting time with key de-risking pieces in place. And then the final part of your question, sorry, there's a big question, why coal? Now, the important thing for any grid is to have a balanced grid. In Europe, we are seeing balancing taking, the opposite effect here, which is that, there's lots of solar and wind being put into the system. And how is that being balanced with the existing gas and coal-fired power plants? In places like Mozambique, where 70 to 80% of the generation is already renewables, mainly hydroelectricity, the problem with their grid is they are highly exposed to the effects of things like climate change and more specifically droughts, which result in the these power generation dams operating below 70% of their capacity. So in Mozambique, it's actually more important to get a balanced grid at the moment. And with that, coal, gas-fired power stations provide that balancing act alongside hydroelectricity. Now, in the north of Mozambique, where we're based, there is no gas, so really the baseload option is coal. So the project is perfectly fitted in with a balanced grid. And I think most importantly, about 2 weeks ago, Mozambique announced sort of a assigned generation plan to include about 1,000 megawatts of coal on the grid, most specifically about 300 megawatts by 2023 in the northern part of the grid, which we are ideally suited to deliver.
You've explained a little bit about how the project is split up between your potential partner and yourselves. With a market cap of just shy of 20 million sterling and with full capex, I believe, of something around $1 billion, is that right?
That's correct, yes.
How do you intend getting there?
So it is a big number. It's $1 billion project, but I think to break down the numbers, 70% of that is expected to come from debt financing, largely because you'll have a 25-year offtake agreement, so you can get relatively good gearing, so between 70 and 85%. The balance that's required, a minimum of 60% is expected to come from our partners, General Electric and CMEC, and the balance will be funded by Ncondezi through a combination of return of historical development costs, which we expect to be between $20 and $30 million, a developer's premium. Historically, when we've signed agreements of this nature, this has been in the region of $20 to $40 million, and the balance from new equity. And I must highlight that on our share register, about 30% of our register is already filled with power development financing institutions and power utilities who traditionally fund these types of projects.
Just want to quickly bring up the share price if we can, talk a little bit about where we are at 6.6 pence. What's built into the share price at these levels? Very briefly, explain what you think investors are buying at these levels and what it is and that you think is going to send the share price up, what key milestones we should be watching out for.
Well, I think that's the important thing, is we're now on a roadmap to de-risking of the project, and the idea here is to get in at the right time. I think the major de-risking milestone will be agreeing a power tariff with government. That's a major thing for any major power company, but before that we have a number of key milestones which I think point to major de-risking elements in this project. Updating of our project timetable is a very important factor. That'll be a timetable that's agreed by both our partners as well as government, giving everyone clear indication of what everyone's working towards in terms of deliverables. The second piece to that will be signing the binding agreements with our partners, which again we've indicated to the market we have draft agreements in place. We don't anticipate that'll be more than a 3-month process once we kickstart that, and that will kickstart once the timetable has been agreed. And finally, I think a major thing within that sort of 3 to 6 month period is finalization of our numbers for the tariff, so that we know that those numbers are firm and the tariff proposal we're putting to government again is firm. We have already submitted a tariff to government. Government have given us the support agreements following that tariff, so we're comfortable that as long as we can stay within that envelope, that we will be sort of good to go.
Good. Look, Hanno, it's a pleasure. Thanks indeed for joining us with this look at the Ncondezi project in Mozambique. As Hanno Pengilly, he's Chief Corporate Development Officer at the company.